Good evening. Tonight, new U.S. job numbers are raising questions about the course of the U.S. recovery. There were 266,000 jobs added last month. Now, that might be sounding okay, but it's way off the 1 million jobs that were expected, bearing in mind the lockdowns and the reopenings. The unemployment rate also ticked up from 6% in March to 6.1% in April. And it's kicked off a debate over whether President Biden's stimulus package is simply too big and underlying and within, it discourages people from returning to the workforce. The president, speaking earlier, made the exact opposite case.
Today's report is a rebuttal to loose talk that Americans just don't want to work. I know some employers are having trouble filling jobs. But what this report shows is that there's a much bigger problem, notwithstanding the commentary you might have heard this morning. It is that our economy still has 8 million fewer jobs than when this pandemic started. The data shows that more workers are looking for jobs, and many can't find them.
The investors, the market, doesn't seem to mind. The Dow, the S&P, its all-time highs. The Nasdaq up nearly 1%. It looks like it might head that way. And the reason, of course, is simple, that the market believes that the poor unemployment numbers will stay the Fed's hand from starting to taper and will increase the monetary and fiscal stimulus that's coming to the market. Clare's with me. Clare, Sebastian in New York. Phil Mattingly is in Washington. Let's do the economics first, Clare. These numbers are very hard to pass. It's difficult to make any major statements on the back of them. But if you had to, what would it be?
There's a few different narratives here, Richard. On the one hand, we are seeing some evidence of a sort of shift reverse of the lockdown trends. On the one hand, we see that big uptick in leisure and hospitality. That's 331,000 jobs added last month. That continues a trend that we've been seeing as they come back from that huge amount of losses that we saw last year. Of that, food services and drinking were up by about 187,000. And on the flip side of that, we see a drop in grocery store jobs, down by about 50,000, and a drop in messenger and courier jobs down by about 77,000. So that sort of looks on the surface like a bit of a shift of what we saw during the lockdowns. But we also see other things that are continuing, like, for example, the inequality that this pandemic has exacerbated. Women fell out of the civilian labour force, about 64,000 of them. So the uptick in the participation rate, that really comes from the male side of the population. So we do see that perhaps childcare issues are also playing into this. So, look, extremely difficult data, as you say, to pass. Very difficult to make head nor tail of it, Richard. But I think, you know, a lot of people do think that this is just 1 month. Don't look at this as an overall trend, and we should still see a strong summer for job gains.
Right. OK, but Phil, taking what Clare's just said, bearing in mind that last month and the revisions on previous months was down, I can see the political argument being made that the stimulus and the unemployment insurance and all the federal aid has simply made it too advantageous not to get a job.
Yeah, look, it's a point you're hearing from the U.S. Chamber of Commerce. It's a point you're hearing anecdotally from businesses. And it's not just us hearing it. The White House is hearing from those private businesses rather regularly, economic officials tell me. However, they don't believe that it's as pervasive, or at least as a singular driving force to the disappointing numbers today, as perhaps other factors here. Look, there's no question about it. The enhanced unemployment benefit certainly is advantageous for some particularly lower paid workers. But you keep in mind, Richard, why that was put in place in the first place. It was put in place to essentially give people a bridge, not to have to work until the end of the pandemic. And Biden administration officials make clear they don't believe they're at that point yet. I think one of the bottom lines from a policy perspective that I've picked up today, both from the president's public remarks and also from White House economic officials, is they don't believe this makes them need to change course in any way, shape, or form. Obviously, you talk about the $1.9 trillion plan with those enhanced unemployment benefits that was already done, but they already have $4 trillion in additional economic and infrastructure proposals on the table. They believe this report actually bolsters those, particularly when you look at what Clare was talking about, women leaving the workforce, paid leave, the necessity of putting all of these kind of broader economic proposals into play, as opposed to just a singular stimulative measure.